Hello and welcome to another update video about Ethereum. Before we dive into the microstructure, I actually would like to take the opportunity to take a quick look at the daily chart, just to get everybody to the same page, right? And quick info, I did say it in the Bitcoin video as well. Today we're going to send out our weekly newsletter late today, so you can still register. It's completely for free. You'll find the direct link in the description. There's typically an update about crypto and general markets, mindset, and so on. It's all in there, so feel free to check it out. So let's take a look at the daily chart. So here, I mean, situation hasn't changed, right? But you can notice the important green trend line, which started down here in June 22. The price so far is holding above it. Obviously, these trend lines, they're not so relevant to an Elliott wave, but still, I have it on the chart because it definitely produced a lot of we have a lot of touch points. And it's quite an obvious one. So, you know, ideally, from a bullish point of view, we hold above it. But it's not a given. It's around $2,000 at the moment. And from a Fibonacci point of view, it would also be ideal to hold above it, because any break below the 50% retracement, which is currently located at $2,100, would indicate weakness. Whereas 1,800 is the golden ratio level, the 61.8 retracement. I mean, we really should hold above it if this is a wave 4 pullback. But it's already indicating weakness if there is a break below 2,100. Just wanted to highlight that. As long as we hold 1,800, we can go with the white count, however. It will, however, with every low we make, and especially if we break 1,800 or 1,790, an alternative perspective will become more likely. And that would be either a larger wave 4, well, it will be a larger wave 4 in my opinion. So that's the larger wave 4 that presumably bottomed in June 22, never really bottomed, but that we are actually still working on it either as a flat correction, okay, so that this is an A, B, C. Where exactly we're gonna land is a bit difficult to say, but it should be below the June 22 low. Or if we form a low above the June 22 low, then I would very much doubt that we have put in a substantial low. In that case, a triangle pattern might be an option, also highlighted here in yellow, and it would give us another DE pattern, so that we have this more, let's say, extended sideways consolidation. Of course, quite volatile, but this extended sideways consolidation probably for another couple of years or so. No? This is, you know, in this scenario, we're only really halfway through the triangle. Maybe a little bit more than half, because waves D and E are typically a little bit shorter than A and B, and C. But still, you know, we are maybe just halfway there in wave C, and then need another DE. So that's just something to be aware of. So should we therefore break below the orange support region, the white count will probably be taken off the chart. The white count is the direct move to a new all-time high. Breaking that would rather open the door to these yellow scenarios, and then we just need to look at the structure after the next significant low, because if the rally isn't impulsive, it would rather indicate this triangle. So that's the overall bigger picture at the moment, and a move to all-time highs is still possible, but the market is definitely struggling, definitely facing difficulties. I'm still watching for one more high. I'm not taking it off the chart. It's not invalidated. But obviously the risk for the yellow scenario has increased, because there isn't any substantial buy reaction at the moment to our support area on the daily. Now let's take a look at the smaller time frame. Here you can see a pathway that could give the bulls a comeback chance. This scenario is highlighted in white. If we really say that, here you see the green trend line as well. If we really say that a fourth wave might have bottomed here on the 5th of August, then in white, the white roadmap, the white scenario, is this flat correction, it's a wave 1 to the upside, which was in 3 waves only here, topped around the 8th of August. The wave 2 was a flat correction. It moved down to deep to be reliable. That's the next problem on this chart. Yeah, so a lot of problems on the Ethereum chart. And also the rally from that swing low that formed on the 6th of September, it is only in a 3-wave structure. So it is not impulsive. Someone asked me, is this move up already a complete diagonal? I mean, I assume you meant, and you posted it on YouTube, I did read it late yesterday, No, I mean, this is for me a three-wave move, yeah? So A, B, C, the proportions work quite well as well. I mean, you can count everything as a five-wave move if you really want to, but you have to use the Fibonacci levels as well. I mean, you can force everything, right? I mean, I could identify the tiniest 4 and 5 in here, but it's just not reliable. So for me, this is a crystal clear ABC structure. For a real five-wave move, I need the third wave get to 2,470 and the fifth wave at least to 2,500. So if we don't get these 5 waves, I haven't got any reliable confirmation that a low has been established on the 6th of September. Until then, the yellow count here on the Ethereum chart hasn't even reduced in likelihood. Now the yellow count is this bearish setup that could take the price down to 1,800. And we even have a 1-2 setup to the downside, as I explained in yesterday's video. Ethereum hasn't done anything to invalidate it. So the invalidation point here would be the Tuesday high at around 2,400. That was also the ideal target for this yellow wave B. That's the invalidation point for a direct downside setup. Now, I'm not telling you that this will definitely play out. Actually, if Bitcoin pushes higher, which seems a little likely, or which seems quite likely, Bitcoin might go for one more high, then actually this 1-2 setup to the downside might be invalidated, but it would only lead to a larger yellow wave B. But please note that should Bitcoin now break down or give us that pullback we are watching for, then it puts Ethereum at risk, makes it quite vulnerable to dropping quite sharply in a third wave. Because if a 1-2 setup plays out, the next move is typically a third wave. I don't necessarily expect it to play out from here unless Bitcoin gives us a pullback. That could drag Ethereum down as well, but where Bitcoin might only form a pullback in a correction down to 53,830, I think is key support on the Bitcoin chart. For Ethereum, this might mean that we're moving down in wave 3 of C of circle 3. So it could be quite a sharp downturn. So please be aware of that. But I wouldn't be surprised with one more high. But again, it requires all 5 waves to the upside, to confirm the bullish comeback. And a break below the wave 1 low at 2,280 would indicate that the third wave to the downside is actually unfolding. That's the update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.